Everyone, where we do live analysis for day trading and take a look at hot spots in the markets for today, Thursday, May 12th. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Brian Caprice. And we are going to take a look at volatility in the markets today. There is just volatility this whole week. We've been calling it Volatility Week. Equity markets have been making massive swings. The cryptocurrency markets just making swings, but getting crushed to the downside. We're now seeing a lot of volatility in the FX markets, particularly with the yen. The yen is absolutely taking off. We take a look at those charts, yen strength. Yeah, you'll see it. So we are going to be taking a look a bit at FX today. Before we jump into the headlines and then get into those charts and start taking a look at levels, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just to give you one little glimpse here, this is the dollar yen, and yeah, it's we were north of 130.50, and we're coming down below 128.50. It's making some pretty big swings, and we'll see that with all those yen charts. Here, Brian, I'm going to flip it over to you. You can take us through the headlines,
Yeah.
let's get into it.
Yeah, I mean, we did actually have economic news releases. I know this day and age, everything is about what is the latest story, but we did actually have some economic news releases. The pound actually did come in weaker than forecast, but it's kind of misleading because it had a big adjustment last time. Their preliminary GDP quarter over quarter, which again, typically for things like GDP, quarter over quarter is a good gauge. In 1 month, anything could happen. There could be like some type of a storm, and that will lower the GDP just for that time period. So quarter over quarter is really the best gauge. Inflation, I like month over month, but quarter over quarter is a good one. Last time it came in at 1, and they actually had to revise it. So they actually didn't have a double miss last time. It was actually higher than expected. So again, it was forecast at 1. It came in, and they're like, oh, it's a miss. But it was 0.3 higher last time. It wasn't a miss last time. So in reality, it's kind of come in where it is, but it's given it a little bit extra weakness. As far as the United States goes, PPI, again, a gauge of inflation we've talked about. The month over month on the actual, just the full thing, again, gas and food included in that one, came in as exactly as expected at 0.5. The core, which is removing gas and food, came in just slightly lower at 0.4. That would be technically overall, that wouldn't be bad. I mean, this is what Bernard's like, oh, look at the core. But remember, yesterday it was higher. So this is just the producers. And then on top of it, we got unemployment claims, which again have now broken over 200,000. So they expected them to be less. And there's actually an article this morning that I saw. It was actually through my phone through Yahoo Finance. I don't have it up here. Talking about how the Fed would really like them to businesses to stop, kind of put like a small hiring freeze on, because that would kind of remove a lot of this for them having to actually raise, because they know the dangers of raising interest rates too fast. But if companies just decide to stop hiring people and closing jobs down, we talked about this a couple days ago, where we talked about the gap of openings versus people willing to work. If that naturally comes down, that fixes a lot of problems as well. But again, when you start seeing hiring freezes and unemployment claims going up, people are like, "Oh God, recession." So those are the economic headlines. Now the news stories, those got a little bit crazy in the overnight. North Korea had fired three short-range ballistic missiles. Japan actually detected one of them as well. So there's a battle going on right now. There's a lot of news and headlines about it. The U.S. Is battling against China at the UN. The U.S. is like, we need to put more sanctions on North Korea. There's a fence around them or a wall around them already. I'm not sure what else we could do to North Korea at this point. China is saying you need to remove the sanctions. And meanwhile, North Korea is like, listen, you need to honor our nuclear program. So it's a crazy, everybody's focused on Russia, and Korea's over here going, yep, let's just shoot missiles. Let's just shoot missiles. So
great.
Yeah, everybody wants to be the big guy. But again, not necessarily great. This is also helping drive some pressure into the dollar. The dollar is just skyrocketing today. The dollar and the yen both are skyrocketing. But looking at the overall last 24 hours, you can see that the pound, you may look at the pound yen and say, oh my God, it's getting slaughtered. It's down 389. That's an absolutely monstrous movement, right? But if you look at the euro pound, if the euro pound is down 45, showing you there's actually pound strength versus the euro. The pound dollar, it's only down 46, and it's actually retracing in the last hour. 46 is not even half of a daily ATR. That's actually not that much movement, considering the dollar is spiking right now. Not that much. And then you can see everything else, but the dollar kind of going crazy. It was up, and then it's back. And again, I wanted to start off by showing the yen first because that's where the most strength is.
Wow.
This is actually the yen futures contract, and you can see that the bottom of this yesterday actually started at 9 a.m. This is where our the CPI data came out, and it's literally been going just straight up. And then the Europeans they stepped into it right here, and then further accelerated the gains in the yen. And again, pulled back, tested it, ended up going higher. So remember, the yen is weak. The yen is weak. We may have to intervene because the yen is weak, but the yen is just absolutely just going crazy. And again, it's got more room to run here. Looking at the dollar, because that's the other big mover right now, you can see the dollar had actually pushed all the way up, and it's actually retracing a bit, which is kind of somewhat helpful. But it pushed up to 104.71. I mean, that's a monstrous number here. And we had talked about 104 being kind of a rally point, and that's really right here is where the Europeans stepped in. It kind of pulled back to that 104 and said, "All right, let's go." And now we're getting the profit taking. We'll see if that continues. The data today is a little bit soft as far as interest rates go, but I mean, all the headlines are like, "Yeah, we need to raise it. We need to raise it. We need to raise it." So, you know, question is the VIX super high because the dollar is going crazy? Is the VIX high because of ballistic missiles being shot? There's a lot of different reasons, but right now all the indices are in the red today. Another bit of headlines too is the IEA does not expect acute supply deficit amid worsening Russian supply disruption. This is interesting. They basically said, yes, there's disruption in Russia. We got that with everything going on. People saying, no, we don't want it. But China is also locking down. They've actually lowered their demand forecast, the demand projections for this year by 70,000 barrels per day. They lowered it. And everybody else out there is screaming, we need more oil. We need more oil. They lowered it by 70,000 barrels a day, particularly because of major concerns with China locking down. They did say that there's been negative sentiment in the markets in recent weeks, as well as damage to the global outlook. And again, they're looking at China. Again, there's a lot of demand that comes from China, but kind of crazy. They lowered the demand, and we're like, wait a second, we're paying how much a gallon per gas right now? So that's an interesting one. And again, oil for the most part it's down a little bit. It literally kind of went off that range, and again, we know yesterday's was a little bit disappointing. We had talked about a level here. We talked about 106.54. We ended up tagging that at about 1 o'clock yesterday, and then tagged it again late last night around 10ish, or I guess 8ish, and we just kind of pulled back down. So we're still kind of in the same range. Like I said, this 104.19 across, you can see we're still kind of right there. If this is kind of a hard one, it's like, well, wait a second, what are we doing here? Is it up? Is it down? I would say right now, typically oil after inventories is not necessarily as big of a mover. Typically, the craziness is before. Right now, I would say that oil is looking on more of a technical level that it's going to come down again. It is kind of sandwiched, and again, this is not necessarily a green. I just wanted to highlight that kind of area there, that 104 level. Let's pull those off. Let's pull that off. Both those are good. And yesterday, by the way, I don't know if anybody saw it. I know some of you saw it. It was a monstrous oil inventory report. It was expected to be minus 1 million. It came in at 8.5 million surplus. Surplus. So we'd actually called this. We did the 35-1 strategy, and it didn't really settle like we liked, but we'd put a long on there. And it was one of those ones that you'd done along with futures contracts, you were getting stopped out. But with Nadex, it worked out perfectly, ended up going higher. So, but this is a monstrous number. So it's funny, we're releasing 1 million barrels a day from the Strategic Reserve. I believe there's 7 days in a week that would be 7 million barrels. If we didn't have those 7 million barrels, we were still at a surplus.
So we are finding the oil.
Yeah, it's not missing. It didn't go missing, so it's out there. And again, it's funny because we got huge surpluses and they're dropping what the global demand is. And again, it just goes to show you that again, it is oil over 100 is the new norm. What's gonna happen?
Yeah, well, the other thing is we do have COVID is out there.
Well, North Korea had that too.
North Korea had that
first
too,
case.
right?
Yep.
And so they're starting to have their outbreak now, and So
Yeah.
we know what's going through China. So uh, and it's going to come over here too. It's going to go around
Well,
again.
it is. Yeah, actually, the local
It's
news was
happening.
that Baltimore's levels have gone above where, they should be, doing masks again. But yeah.
Yeah, we just don't have an appetite for it. So, but it is going around, and uh,
Yep. Actually, Melissa this morning is woke up and she's like, "I feel like I'm dying. We're gonna test me as soon as we're done." I was like, "Great,
oh
lovely."
no.
That's all I want to deal with today. But
Oh,
yeah, so oil's
no.
an interesting one. Natural gas also has pulled back a little bit, but I wouldn't say, although it's down 2.8% today, it's still in the same range. We had that 50% drawn from top to bottom, and that's kind of what it went off of. It based there forever and dropped and then kind of bounced again. Same thing, it's basing around that same level. I will say a break below 715. There is kind of a racetrack trade in here. There's not an ideal area to kind of draw it, but probably in that range right there. And again, it's going off the top, which it should. Eventually, it'll break through. So I'm thinking that 715 is kind of where natural gas guys. And again, we have oil inventory, or we have natural gas
Natural
inventories today.
inventories. Yep.
Yeah, I would say that this probably is, again, it's a very negative sentiment today. I mean, right now, all the indices are in the red. Commodities, all in the red across the board. Gold, again, we talked about a level up here yesterday. And again, we touched it once. It was confirmed. It rolled over at late last night and is pushing back down to that 834. Again, dollar strength, gold weakness. Silver, I'm happy to say, my 21 target was hit. I said it yesterday. I'm like, yeah, I really, yesterday we're sitting right in here. We had this jump up, and I was like, yeah, come on. We can hit 21 this week. Uncle Warren, thank you again. I appreciate it. He watches our program, everybody, because sometimes when we say these things,
And
magically,
then
as soon as we are done, it goes where we expected it to go. So Uncle Warren is a fan. I love you. We hit our 21 in one day. I said this week I'm still hopeful, and we hit it in less than one day. So again, my 21 target has been tagged. That's what the black line is. We're pulling back up to it now. But is there more weakness in silver? I'm going to say probably yes, and here's why. We look at the big flyers. Crypto, Bitcoin is another one that we need to talk about. We mentioned it earlier
yeah,
this week. Bitcoin actually got down to 25,390. Okay, it broke the 26,000 mark. It's lost like 55% of its value this year. It's been and again, everybody's quiet now. I mean, all the experts for some reason are quiet. People that were like, "I told you so," Bitcoin to the moon, and I don't know where they are. We found oil, but we lost the Bitcoin people.
the crypto markets yesterday
Yeah,
all of them lost 200 billion in value.
yeah. Again, Bitcoin coming back a little bit. Again, of all the coins, it would be the one that was considered the most safe, if that's the correct word. But Ethereum, again, number two, same chart pattern, down 6%. Dogecoin, again, this has been, the meme lovers stock. It's down another 7% today. It's down at 7 cents. And again, normally for this one, you're like, hey, we were talking about it forever. And it's like, yeah, 14. It goes back and forth. It's at 7 right now.
Yep.
So again, very rough market to be in. Bonds are actually going. And again, this is something that we talked about. One of the articles I found was,
Finally.
yeah, we talked about a week ago how the bond yield was like 3%, 3.14, and then all of a sudden yesterday it dropped all the way down to 2.8. It was like a huge monstrous move in bonds because they're just trying to grab something at this point. Again, red markets, people are looking for bonds. They're trying to find money right now, or find places for money. So again, bonds being up, it's another gap in TLT higher. And again, for those of you, you're not really necessarily trading this at Nadex. But when you're running some of the targets on it, remember bonds is a huge market. It affects the dollar. It's going to affect the indices. When this starts to roll, and again, it is at a 61.8. There are sellers in here. If this was any other chart, I'd be like, hey, this looks like not a horrible buying opportunity, right? Or I'm sorry, a selling opportunity. When bonds starts to roll back down again, there's ways that we can play this in the stock market, in the indices, as they tend to go up. Because remember, they tend to be inverse. As one goes up, one goes down.
So right. So
Yeah.
paying attention to that
So
is important. Yep, for sure.
yeah, I mean, so as far as the indices go, again, obviously there's a lot of chop in there. There was a 23.6 pullback in the overnight. The new 23.6 area, it just happens to be a level we're looking for. The Harry Potter we talked about breaking through, these have all gotten kind of blown up at this point. They've all been pushed through with it right now. I would say, again, watch out for this level here, 39,026. Anybody that runs the last overnight down and who's looking to get into this is probably looking at this number saying, hey, I'm getting short because everything is red. It is kind of a Globex area. Watch out for it. The Globex trap has been real. I know there's a person online that I've been following, and I tend not to get into these things with people, certain people, and she's one of these people, and she's like, yep, she's like, this is the best, this is the best thing, and not everybody knows that. I was like, it's a trap every morning. So, the new expert out there. But um, again, they all kind of have the same kind of look. NQ is down the most today. It is weak. Tesla also getting slaughtered. I'm very curious to see if Mr. Pelosi has puts now. If he got rid of all his calls and went to puts, it's dropping. We do have some levels lower, but Tesla getting slaughtered, Apple getting slaughtered. Right now, every one of these is gapping down. Twitter, Apple, Disney. You said Todd is also getting crushed. I think we looked at that earlier. Their
Yep.
earnings came in mixed. Where's it? I don't need Disney futures. Again, also a gap down in Disney, and they had mixed results. Remember, mixed results now is worse than bad, right? So, they are also down. So, there's a lot of negative sentiment out there, but NQ is obviously the weakest. If it does find a bottom, here's that Harry Potter we talked about, yesterday. And again, drop down, pulled back, grabbed it. And I'm on a 30-minute, not even a 15. It would look better on a 15. There you go.
There it is.
Drop, base, pull back to the level, and boom, all the way down to the
Straight
profit
down.
target we just passed through it. So again, there's your NQ trade from we've been talking about. YM. So YM ended up coming through and it punch through that first level. The second one we has 31,423. So right now, according to percentages, the Dow is the strongest. Okay, it is down the least. It's only down half a percentage point. Meaning, if we do get a reversal this morning in the equities at all, we're probably going to see it in YM first. Remember, the core being lower than that is actually good for the Dow. Remember, the Dow's not really. I mean, you're not talking about oil and necessarily food there. It's more kind of manufacturing, your consumer staples, kinds of things like that. If it's going to reverse, I would say look for 31,423. Russell, Russell is just continuing to grind again. It had some craziness yesterday. I mean, all the way down, all the way back up again. And I'm going to
Yeah.
say it because I say it every week and not everybody hears me. But if you guys didn't know, that's 1030 right there.
There's
Came
that
back up. We
reversal.
tagged the profit target. We had the red box drawn saying, here you go. That's the level. We hit it at 1030 and it reversed and went straight down. So if there's going to be a reversal today, could have come in at 1030. The chances are, again, I don't have a crystal ball. I don't know when exactly it's going to change, but I do know if you look at it and go back and do your charts and research, 5:30 in the morning for the European session and 10:30 in the morning for the U.S. session. I don't know how many times I've said it. Every single time we see these major reversals, 10:30, 10:30, 10:30, 10:30,
Yep.
10:30. So be looking at charts today at 10:30. Um, we'll see where kind of the rolling, but you know, I would expect the VIX to start coming back down a little bit, probably a little bit of a pop, just because everything is so red right now once the U.S. session opens. But again, if we can start getting the VIX to start trying back down again, we should see some reversals, and we should see it in the YM first, which is actually right now it's only down 0.4, so it's already
So
starting to kind of get some profit taking from the European session. So
awesome. All right. Listen, lots of volatility in the markets. Volatility, that means trading opportunity. And so certainly these are times where traders, there's places to be looking and potential trades to be made. If you're looking for opportunity, these markets provide a lot of it. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also very accessible. Our emails are right there. If you want Brian, catch him at support@keeptradingsimple.com. And I'm not going to go through a whole recap, but that's really what we're seeing. Volatility. We're seeing that yen strength. We're seeing quite a bit of movement with the pound as well. So FX markets all over the place, equities. We've been having wild swings every day, down, up. I mean, it's
yeah,
a
a lot of reversals, a
lot of
lot of whipsaw
reversals, a
also.
lot of unpredictability, but it does create opportunity. So and that's what
And
traders want.
guys, don't forget, just to add this in there, remember when we have whipsaw markets, Nadex has three products. They all have their pros and cons. When you have a whipsaw market that's literally up and down, think about which one provides the best opportunity, which one are protected against whipsaws.
And you're
Sometimes they're
right.
great, sometimes there's one that's not. And again, that's why you have to understand and educate yourself on all three products to figure out which one is the best one for the scenario that you're in right now.
And if you're not familiar, I mean, I know a lot of people come here for binary options people, and if you missed it, I did a primer on binary options last week. It's available on our YouTube channel. If you're interested about knockouts, in 3 hours, I'm going to be doing the basics of knockouts. So if you're unfamiliar, go over to the Nadex website. In fact, I'll just make this easy for you real quickly. If I can do this and find it in a few seconds. If you're interested in learning about knockouts, here's the link to register for today. There we go. I got it. Uh, please feel free to register. And you register, if you can't join, you'll get access to the recording. But I am going to go through what are knockouts, why, and how you use them. With that, Brian and I will be back tomorrow morning to wrap up this crazy week. And until then, good luck in the markets, everyone. Thank you so much for joining.